Today I am going to teach you +2 Accountancy. Name of the lesson: Valuation of Goodwill lesson. Hi students, good morning. Today I am going to teach you +2 Accountancy. Name of the lesson: Valuation of Goodwill lesson 4. Under the valuation of goodwill, there are 3 methods to calculate the valuation of goodwill. Number 1, average profit method. Number 2, super profit method. Number 3, capitalization method. Under the average capital method, average profit method, already we have seen 3 sums. The rest of the sums we will see now. Okay, take illustration 4, page number 124. Very important 3 mark sum, or sometimes it will ask in the 5 mark sum also. I'll read the sum. This is the sum based on average profit method. From the following information to Arul Enterprises, calculate the value of goodwill on the basis of 2 years purchase. 2 years purchase of the average 3 years profit. So it means we have to find out the average profit for the 3 years. Okay, after calculating the average profit, we have to find out the valuation of goodwill. Okay. But he has given some information, that is adjustments before calculating valuation of goodwill. Profit for the year ending 31st December 2016, 17 and 18. 16, 46,000, 17, 44,000, 80, 50,000, 18. But some more adjustments he has given. A non-recurring income, rupees 5,000 included in the profit for the year 2016. See, usually while we preparing the profit and loss account, in the debit side expenses will be updated, credit side incomes will be updated. So when we getting the net profit, all recurring items of incomes and expenditures only, that is profits or losses only, will be updated. Okay, in profit and loss account, debit side all expenses, all incomes will be updated based on the that is recurring items. Often what are the expenses, often what are the incomes are coming in the expenses, that only we will update it in the profit and loss account. Based on the expenses and the incomes of recurring items only, we will get the net profit. So it means non-recurring items will come in the balance sheet only. Sometimes we'll be preparing some non-recurring items will be wrongly included in the P&L account. So it means that your profit is wrong. When if you put the non-recurring items in the profit and loss account, your profit may be wrong. So like that, here they are calculating the profit, a non-recurring income rupees 5,000 included in the profit of the year 2016. So wrongly included. So what we have to do, from the 2016 profit we have to deduct this non-recurring income. Next, a closing stock of rupees 2000 year the 2017 was overvalued rupees 10,000. Usually closing stock valued at cost price or market price, whichever is lower. Sometimes they might have calculated in wrong way. Okay, so by that time that closing stock may be overvalued. Okay, for example 100 rupees is coming, means they put wrongly 150 or 200 rupees. So the excess amount of closing stock of the particular year should be deducted. Okay, the closing stock will be the next year's opening stock. Okay, then how to remove this closing stock value fully means, first we have to deduct which year they have wrongly calculated in 2017. So go to the 2017 profit, deduct the closing stock of excess amount. Then come to the 2018. In 18, the 17 overvalued will be the adjusted in the opening balances. No. So here we have deducted minus. The next year 2018 the same amount will be plus, because minus plus become nullified. Okay. Because of that, if any over valuation of closing stock will come, means First you have to deduct that particular year, in which year they have wrongly calculated the overvaluation of closing stock. In that particular you have to deduct that amount, and in the next year we have to subtract the same amount as in the name of overvaluation of opening stock. Okay, so 1 year minus, then continuous next year will be plus the same amount. This adjustment only for closing stock, not for others. Okay, if any overvaluation of valuation of closing stock is given in the sum, you have to deduct that particular year's amount, deduct the closing stock value. Next year the same amount will be adjusted as plus. Okay, the name is overvaluation of opening stock. Here when we deduct overvaluation of closing stock, when we we put opening valuation of opening stock, closing excess valuation of opening stock, or overvaluation of opening stock. Okay, so first we have to deduct all the adjustments given in the questions, then we have to find out the adjusted net profit. After the adjusted net profit only we have to finding out the average profit, then valuation of goodwill. So first in this sum we have to calculate the adjusted profit, because they have given general profit. So from that we have to deduct some amounts, so whatever the given adjustment, so that adjustment should be deducted. So illustration 4, page number 124. Page number 124. Calculation of adjusted profit. Particulars. 3 years they have given: 2016, 2017 and 2018. Rupees. Okay. Now, profits. What are the profits they have given for the 3 years? That is rupees 2016 46, 17 44, 18 50. 46, 44, 50. So 46,000, 44,000 and 50,000. This is the profit they have given in the sum. From this we have to deduct the two adjustments given in the sum. First adjustment is less. Non-recurring income. So it was included in the year of 2016 rupees 5,000. So now we are deducting this because wrongly included. Now we are deducting. In which year? 2016 minus. What is the amount? Amount is rupees 5,000. Okay, so here nil, here nil. What is the balance? 46 minus 5, 41,000. Here 44,000. Here 50,000. Now, the second adjustment is the closing stock of the year 2017 was overvalued. So in 2017 closing stock was overvalued, that which should be deducted. So in which year? 2017. Overvaluation of closing stock. What is the amount? Amount is rupees 10,000. So in 2017 you deduct rupees 10,000 because overvalued, that amount should be deducted. Here nothing is there, here nothing is there. So 41,000. 44 minus 10, 34,000. Here 50,000. Next. Usually the closing valuation of overvaluation of closing stock will be affected the next year's opening stock. What is the next year? 2018 opening stock will be adjusted. How it has to be adjusted means here the closing stock will be deducted. No, the next year the same closing stock will be, that is opening stock will be added. So minus 10,000 plus 10,000 will be adjusted. So automatically the wrong valuation will be over. Okay, now what we have to do, this adjustments will be done only for overvaluation of closing stock only, because but other adjustment and all will come in only in one places, but overvaluation of closing stock only will come in the two places. First year, which year is they have wrongly overvalued, in that year you have to deduct, in the next year you have to add. Okay, what we have to do? Add over valuation of opening stock. So the opening valuation of closing stock should be deducted. The same amount will be added in the next year as in the name of overvaluation of opening stock. So this minus 10,000 will be added here plus 10,000. So 41,000, 34,000, 60,000. That's all. So adjustments are over. So this profit is called adjusted profits. These profits are called adjusted profit. That 41,000, 34,000 and 60,000. Okay, 41,000, 34,000 and 60,000. With the help of these profits only, we are going to calculate what? Average profit. After finding out the average profit, we can calculate the goodwill. Okay, now I'll find out the adjusted profits, the average profit with the help of these profits. So, calculation of average profit. Average profit, which is equal to total profit divided by number of years. What are the total profit we got it? 41,000 plus 34,000 plus 60,000 divided by how many years? 1, 2, 3. So divided by 3. So 40 plus 30, 70. 75 plus 60, 1,35,000 divided by 3. That is equal to 4 3s are 12, 5 3s are 15. So 45,000. Rupees 45,000 is the average profit. Now we have to calculate the valuation of goodwill. So goodwill, what is the formula for goodwill? What is the formula for goodwill? Average profit into number of years purchase. Number of years purchase. Here average profit is rupees 45,000. Number of years purchase given in the sum 2 years. Number of years purchase given 2 years. So you have to multiply with 2 years. So rupees 90,000. Rupees 90,000. This is the valuation of goodwill. Rupees 90,000. Now let us see the next example, the same model. Okay, this sum maximum they will ask in the 3 marks, sometimes they will ask in the 5 marks also. Very important sum. Note it down. Next sum is illustration 5. Illustration 5. Page number 125. Page number 125. Okay. Now, I'll read the sum now. The following particulars are available in respect of a business carried over by a partnership firm. Profit earned 2016 rupees 30,000, 2017 rupees 29,000, 2018 rupees 32,000. Profit of 2016 includes a non-recurring income rupees 3,000. What we have to do? So from 2016 we have to deduct this 3,000 rupees because they have wrongly included. So this non-recurring income should be deducted from the year 2016. Next, profit 2017 reduced by rupees 2,000 due to a stock destroyed by fire. What they have done? Destroyed by fire means they have kept the stock in one places. So because of some reasons it would have fired. So what they have did? Fired in the stock only, but they wrong that 2,000 loss of fire they have wrongly deducted in the profit. That is wrong. Okay, profit is after selling only you will get the profit, but fire is taken place in goods only, that is non-selling items, closing stock of goods kept in the some places. So it is fire damage the goods. So fire damage the goods non-selling items only, but what they did, the non-selling items fired goods loss will be deducted wrongly in the previous year profit. So that is wrong, that should not do. So what we have to do, that loss of fire rupees 2,000 will be deducted from the particular year profit because they have wrongly included that loss. That is not that should not be included in the particular year. Okay, stock is non-selling items, that is they kept in as a stock only, but the stock fired means that is calculated in the some other way. It should not come in the profit. Okay, they should not deduct the profit. So what we have to do? So the particular loss will be that particular amount included in the particular year. No, that particular amount will be deducted from the particular year. Okay. Next, the third stock. The stock is, so they did not insure the stock. For that purpose only the goods were damaged by fire. So they are decided, okay, we have to insure our goods. Then we will claim from the insurance company for damage. So they are deciding, okay, we will put the insurance premium for our stock in future. So for that they are calculating how much they have to pay as a premium, estimating rupees 5,600 per annum. So they decided to pay insurance premium for their stock because of fire loss or theft. For that they are going to put the insurance premium. How much? They did not pay it, but they plan to pay rupees 5,600 per annum. Okay. You are required to calculate the valuation of goodwill on the basis of 2 years purchase of average profit of the last 3 years. So in the previous sum, how we calculated the adjusted profit, likewise we have to calculate here also. Okay, now I will prepare the calculation of adjusted profit. Calculation of adjusted profit. Particulars. 2016, 2017, 2018, rupees. Okay. Profits. What are the profits they have given? Profits rupees 30,000, 29,000, 32,000. 30,000, 29,000, 32,000. Less. First adjustment is non-recurring income included in the year of 2016 rupees 3,000. So less non-recurring income in the year of 30,000. 30 minus 3 will get 27,000. 29,000. 32,000. What is the second adjustment? Stock destroyed by fire. That should be deducted. Less stock destroyed by fire. This amount they have wrongly deducted from the particular year of profit. Which year? That is in the year of 2017, rupees 2,000. So in the year of 2017, 2,000 rupees they have wrongly deducted. Now we have to add this amount because they have deducted wrongly. Now we have to compensate this amount by adding. Okay, they should not deduct. That is not a loss. That is abnormal loss. So loss, that is not a actual loss, but they wrongly deducted from the particular year. Now what I have to do? I am adding this amount because they wrongly deducted. Now I am adding. Okay. 2,000 rupees. Okay. 27,000, 31,000, 32,000. So this is the adjusted profit. We have to calculate the average profit with the help of these adjusted profits. But they have given one more adjustment, that is they in future they have to pay some insurance premium, say rupees 6,500 something, but that amount they are going to pay after next year only. What we have to do, this expenses they have to pay in future only. So after finding out the adjusted, that is average profit, from the average profit we have to deduct that particular expenses because they did not pay it so far, so they are going to pay. That type of amount will be deducted from the after calculating the average profit. Okay, now I will calculate the average profit with the help of this information. So average profit which is equal to total profits divided by number of years. What are the total profits we got it? Adjusted profit 27, 31, 32. 27,000, 31,000 plus 32,000 divided by 3. So 27 plus 31, 58. 58 plus 32, 90,000 divided by 3. That is equal to rupees 30,000. Rupees 30,000. Okay. So 30, 60, 80, 90. So this is the average profit. From the average profit 30,000, we have to deduct the insurance premium. Insurance premium. How much they are going to pay insurance premium? Rupees 5,600. From 13,000 we deduct rupees 5,600. We'll get 24,400. This is the actual average profit after deducting the insurance premium. Now we have to calculate the goodwill. So what is the formula for goodwill? Goodwill is equal to average profit into number of years purchase. What is the average profit? 24,400. What is the number of years purchase? The number of years purchase they have given 2 years. So we have to multiply with the 2. You will get rupees 48,800. This is the actual goodwill of this sum. Okay, this is the valuation of goodwill for this rupees 48,800. Now let us see one more sum, that is calculation of weighted average profit. Weighted average profit. This weighted average profit also will comes under the average profit method only. Weighted average profit. And for that, the formula for weighted average profit is total of weighted profit divided by total of weights. Okay, this is the second type of average profit. So the another method of average profit method. The another method is called weighted average profit method. Weighted average profit method. For this, the formula is total of weighted profits. Total of weighted profit divided by total of weights. This is the formula for weighted average profit. Okay, it means they will give a purchase of rice with weight and rate. 5 kgs of rice, each kg 50 rupees. 2 kgs of sugar, each kg rupees 40 rupees. Like that, they will give the weighted and at their prices. So if it come means that is method of weighted average profit method. For the formula for weighted average profit method, total of weighted profit divided by weighted total of weights. Okay. Now let us see one sum. Illustration 6, page number 126. For the purpose of admitting a new quarter, the firm has to decide the value of goodwill for 3 years purchase of average profit for the last 4 years weighted average method. They have clearly given. Now, profit of the first 4 years they have given 2015 profit is 2000, for them the weight is 1. 2016 profit is 22,000, for that weight is 2. 2017 the profit is 24,000, for that weight is 3. 2018 the profit is 28,000, the weight is 4,000. For that we have to compute the valuation of goodwill. Now we have to compute the first weighted average profit. After calculating weighted average profit only, we have to calculate the goodwill. Okay. Now I will calculate the weighted average profit. Total weighted profit we have to calculate. Now calculation of weighted average profit. Illustration 6, page number 126. Calculation of weighted profit. Calculation of weighted profits. We have to put the column how many years. I think there are 4 years. First is year. Second one is profits. Third one is weight. Fourth one is product. Fourth one is weighted profit. Fourth one is weighted profits. Which year? 2015. Amount is profit is 20,000. For that the weight is 1. 1 into 20,000, 20,000. Next, 2016 profit is 22,000. 2016 profit is 22,000. Weight is 2. 2 into 22,000, 44,000. 2017 profit is 24,000. 24,000. Weight is 3. So 72,000. Next, the profit for 2018 is 28,000. Profit is 20, 2018, 28,000. Weight is 4. So 28,000 into 4, 1,12,000. 1,12,000. Now we have to add this total. We'll get 0, 0, 0. 4 plus 4, 8. 8 plus 6, 14. So 2,48,000. What is the total? Total weights is 3 plus 3, 6 plus 10. So for calculating average weighted profit, we need total weighted profit and total weights. Total weighted profit is 2,48,000. Total weight is 10. So after calculation of weighted profit, we have to compute the average weighted profit. After calculating this, we have to find out the average weighted profit. After the average weighted profit only, we have to calculate the valuation of Goodwill. Now, average weighted profit. The formula for average weighted profit is total weighted profits divided by total weights. What is the total weighted profits? The total weighted profit is rupees 2,48,000 divided by total weight is 10. So 1010 will be cancelled. Rupees 24,800 is the average weighted profit. After calculating average weighted profit, we have to calculate Goodwill. What is the formula for calculation of Goodwill for under the method of average weighted profit? Means average weighted profit into number of years purchase. What is the average weighted profit here? 24,800. Year of purchase they have given. How many year of purchase? 3 years of purchase. 3 years. So 24 into 3, 0, 0, 8 3s are 24, carries 2. 4 3s are 12 plus 2, 14 carries 1. 2 3s are 6 plus 1, 7. 74,400 rupees. This is the Goodwill of weighted average profit. Okay. Based on the sums, exercise 5, exercise 6, exercise 4, exercise 5 and exercise 6 based on the sums whatever we have done so far. So you please practice the exercise sums also. In next class I will teach you the next method, super profit method. That is also very important method. Okay, so we can see the next class, super profit method of valuation of Goodwill. Thank you.